The question this week is breaking my mortgage the only real option I have, right? So that's what we're here to talk about today. We've got Phil Jungwirth here from DLC Mortgage Force.
Hey everyone, I'm happy to be here, Derek. Thank you for having me.
Thank you. And this has come up because we've got buyers that they're stuck in their mortgage and they're looking at how they can buy, right? Without paying the large fees that the banks often charge if someone cancels and cuts their mortgage. So so if you could tell us a little bit about the options.
For sure. The first option is definitely going to be porting. I find this a great option for buyers. So what that really means is that they're transferring their mortgage on their own house that they own right now to the new one that they want to buy. And why this is such a good option is that they get to keep that interest rate. Now, a question that I get with this porting option is, do I have to stay with the original mortgage amount or can I add on? And with most lenders, you'll have to ask your lender, but with most lenders, you are able to add that to that amount. It's going to raise the interest rate a little bit, but trust me, it's still gonna be what interest rates are today. And if you are buying at a lower interest rate, your buying power will go up because we approve people based on the interest rates that are out there. And the second option that they have there is assumption. And what that means is that you pretty much sell your house and the mortgage to someone else. So this is a good option if you are not buying somewhere, but you still don't want to break the mortgage on maybe an investment property. And this just means that the buyer is taking over that mortgage. They still have to qualify, but it can be more marketable for your property because it's going to be at a lower interest rate. And so more people can qualify for that property. And the same rule applies here. The question I get often is, can I buy this house without putting the difference in mortgage and purchase price down? And the answer is most of the time you can. It just depends on the lender, and it can definitely be a good option for people that don't want to pay these big interest rate penalties.
Awesome. So basically you're looking at if they're buying a new home, then porting it, so taking their current mortgage, transferring it over, they can save on their interest rate. If they had a lower interest rate before and they don't need to get a new one in that way. And then also if they're not buying a new place, trying to get a new buyer to take over their current mortgage. And then also it could be a benefit to the new buyer as well if they had a lower interest rate, right?
For sure. And it's definitely a benefit to the seller too, because like I said, more buyers will be able to buy that property because it will be a lower interest rate than today's rates.
Awesome. All right. Well, if you have any questions, leave them in the comments below. And yes, thank you very much.
Thanks everyone.